Hello. I was on mute then. I was on mute. Hello. Welcome to the last stream of the trading year. It's casual Thursdays for me today. But I hope everybody is doing super well. We have a lot of interesting stuff to talk through today. We had the FOMC meeting last night. Which I was watching and found very interesting. Some of the comments from Powell I thought was super interesting. We also had a Bank of Japan announcement. We've just had a Bank of England rate announcement as well. So there is a lot going on in the markets this week. And, usually in these types of market environments, we see US dollar strength. And, that is exactly what we saw for the past 2 weeks. Dollar strength continued. I mean, we've now breached into significant levels when you take a look at across the board of sort of dollar index, for instance. But it's getting interesting now. Because I feel like this is getting to a point now where maybe people think that the dollar can't go any lower, and we're starting to see some significant dollar strength. So I am a trend trader. Well, I'm a fader by nature, but trend trader for the P&L. But the markets have been through some significant change. I can see here, Ibrahim. There was a massacre yesterday. There was. All charts have blood on them, waiting for your insights. Hi to you, Bruce. Al, welcome. Rye Guy, hope you're doing well. And Vincent, thank you. Thank you as well. Thank you for joining the streams throughout the year, guys. I really appreciate you all coming and turning up, giving me your insights as well, giving me your thoughts. So let's get into it then. This is the NASDAQ. This was probably the market that was driving a lot of sentiment in terms of risk in the markets. A lot of tech stocks have performed really, really well this year. But, December was always a chance that they could give back some of those gains that had entered into the market. And NASDAQ was one of those that got burnt. Now, we did talk about this a little bit on Tuesday. We looked at the commitment of trader reports. And we did have a look at the fact that there was a short signal on the COT reports for the NASDAQ. We have hedge funds selling aggressive levels we haven't seen for a good while. And we just kind of surpassed these previous lows in contracts. So we were at a very, very significant level. I think the last time we kind of looked towards these kind of levels was sort of back in 2018, 2019. So we haven't seen commercials as short since those times. Same on the sort of hedge fund side. They were long at significant levels, and they are continuing to build into that long position. Now, when we go just take a quick look at the NAS, obviously, when you look at the chart and look at its performance throughout 2024, you have to admit, if you were, if we take into consideration, a lot of people that invest into stock markets are investors, do you really want to be buying at these kind of highs? And the answer really is no. You want to try and get some value at lower levels. So just to me, just looked like a classic. Fed was the excuse for the market to take some profits on the year, close the books out going into holiday season next week, and you can see prices has fallen. Now, I'd love to see a bigger retracement here on the stock market. Maybe the Fed's decision to cut but then hold potentially in January is going to be that decision for stocks to kind of come a little bit lower. But just looking at weekly time frames at the moment, I'm trying to find areas where prices found some support in the past, some kind of value, and that's these areas here are where I want to kind of get involved with stock markets in general. Now, I did touch upon a video yesterday, it might have been the day before, where I was talking about the Dow Jones, and the Dow had fallen for 10 days in a row. And I was looking at this little move in here, and I kind of spotted this support zone coming in, and I was looking to see if we could get some kind of rebound and a break of that sort of condition for the market to turn back from bearish to bullish. But obviously that sentiment there continued to drive prices lower as well. So stock markets were bleeding yesterday. Hi Ratish, yeah, feeling a bit better, thank you. Hope you're well too. But yeah, these markets at the moment are just trying to find value now. I'm looking at around, trying to see that myself. Where are those key kind of value points in the market? It's a really good time for you to kind of clear all your data off your chart, go to the higher time frames, and have a little look at where that value may be for yourself. Me looking at these kind of previous highs in the market, you can have a look at sort of key areas of structure on higher time frames, just to see where's the market likely going to try and sort of reinvest capital going forward. So yeah, it's been an interesting week. Let's talk about some of the fundamentals. Let me know, guys, what your thoughts are around this as well, because I'd like to get your thoughts on this. I'm just going to pop this up here a second. Where did my markets make clear chart go? There we go. Let's tag that in with the news. I'm just going to go grab one of Federal Reserve Chairman Powell's quotes, which actually posted onto LinkedIn, because I just found it to be a very interesting quote that he said. So basically, this is what the Chairman Powell said. It's kind of common sense thinking that when the path is uncertain, you go a bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down. Now, these comments here are, that is just sort of laying the law for, we've got President Trump coming in January. We don't know what the fiscal policies are yet. There are obviously tariffs coming, but to what extent those tariffs come, we still have to wait and see. How many tariffs get passed, X, Y, and Z, still has to be something that is kind of thought out as well. What countries it's going to impact, what companies it's going to impact as well. What does it mean for consumers at the end of the day? Tariffs are usually inflationary, so I think this is a good reason to why Powell has come out with these comments, and basically saying that, look, we're not going to do anything just yet because of the idea of Trump coming in, and we don't know what Trump is going to bring. When we go to the CME Fed watch tool, we can see that the markets were pricing in now for January a 91.4% chance of no change in January. In March, we're kind of leaning again towards no change. In May, we're also leaning a little bit more towards a bit of an easing, but it's still 50-50 in May. So there is a chance that the Fed are going to cut again, but only if inflation starts to fall. Now, if we go to tradesandeconomics.com, you can just do something really simple. You can come down to this little chart here. Fed are looking at still a strong GDP growth rate. Interest rates are now at 4.5%, the inflation rate up at 2.7%. So if you click on this, you can see that the trend for inflation month on month has started to creep back to the upside, heading back down from 2.4% up towards 2.7%. So this is what they're trying to prevent. They don't want to see a re-acceleration in this inflation. Why? Because then the costs to consumers is going to be higher, cost for businesses is going to be higher, and if the cost of business gets higher, what is the first thing that companies do? it's layoffs, right? They go into laying off people, right? So you can actually, there is a chart here that you can actually look at, which is job layoffs. The data hasn't come out for November, but if you actually just kind of look back over the year, and if you were to put a moving average on this, you know, I would say that the moving average would be starting to point up a little bit when it comes to sort of layoffs in the US. When we go and take a look at sort of the unemployment rate, which is here, you know, unemployment rate climbed back up to 4.2%. Now, they're not going to want to see this get anywhere near 5%. You know, usually above 5% spells a little bit of a disaster. So it'll be interesting to see how the Fed navigate the markets in the near future, because, you know, when we go take a look at some of the bond yield pricing at the moment, and we have a little look at where the US 10-year yield is, for instance, we've now breached the 4.5% level. You know, that's usually positive for a currency. So we've seen that 10-year yield rise. 2-year yields are actually on the back foot a little bit, which is very, very interesting. Very, very interesting. The reason why this is very, very interesting to me, and I'm going to go on a bit of a rant today, guys, so hopefully you'll just stick around for this. Ratish, I think correction was overdue, waiting for a big trigger. Powell gave him the reason. Yeah, absolutely. I completely agree with your statement there. But if we go over to Fred, now this is the actual data that you can get through the Federal Reserve. Okay, let me just pop this in. This is the SARM rule that I've got here, just on a bookmark. But the SARM rule is a sort of recession indicator, which did get triggered this year, but Julia SARM herself said there's no chance that is, sorry, Claudia SARM said that there's no chance of that happening right now. They don't think that actually is correct. But if you just click onto the economic data area, come down to popular series, you'll see something called the 10-year Treasury constant maturity minus the 2-year Treasury constant maturity. Okay, and just zoom out on this. Okay, so we'll zoom out as far as we can. Now you can see there's a little bit of a sort of calculation to what this is, right? So this is Treasury bonds, calculated interest rate spreads, and is obtained by the US Treasury Department. And basically what they're calculating here is the difference or the spread between the 10 years and the 2-year maturity. Okay, and the reason why they do this is because this has been a sort of predictor of recessions in the past. Now, it's not very good at timing recessions, but usually between sort of 6 to 18 months after we start to see the inverse kind of correction, which is what we're getting now, it has led to recessions in the past. So this is something that's really interesting to me, because this is where the yield curve kind of inverts. Okay, that's when people are kind of favoriting 2-year yields over 10 years. Now we're starting to see the difference here. We're starting to actually see 10-year yields are more favored than 2-year yields. That basically means that people or investors are uncertain of what's going to happen in 2 years, and they would rather invest in longer maturity bonds because their money is almost tied up for longer, so there is less chance of it sort of fluctuating as aggressively. Okay, they're willing to put their money away longer in these bonds to get their return back, for a safer return essentially than the 2-year bonds. So we're starting to see that now. Now, typically in the past, that has led to recession. So these grey markers here are recessions, right? Now, I feel like COVID is a bit of a blip one, because that was something that I think was just, you know, I don't know how you can predict a global pandemic, right? You know, maybe you can, but you know, there are lots of diseases coming out every single day. So, you know, how you predict a global pandemic, I don't know, and a recession around that, I don't know. That's probably why it rebounded so quickly. But you can see all these areas here are areas where we have, you know, those recessions, and what we've usually seen is sort of that sort of people favoring the 2-year over the 10-year. That then inverts, and then you get this huge sort of recession period, right? And recessions don't actually last for too long. You can actually see recessions don't last for too long. But this is something that I'm just keeping in the back of my mind, right? I'm not saying that this is a, go out tomorrow, it's recession, go sell, go sell, stock markets. And again, this is not personal advice or anything like that. This is just my opinion on matters. But, to me, that is a bit of a warning sign. So I have set an alarm for 6 months away, and I'm looking to see what happens in the market in 6 months' time. But this is something to keep on your notes. Just have a little look at every now and again. Always keep a note of what's going on with the unemployment rate as well. The unemployment rate really does matter, because what is the lifeblood of an economy? It's people working, it's the labor force. If unemployment rates rise sharply, then that's a pretty good indication of what's going to happen going into the future. So yeah, lots to kind of digest there in a short period of time. But we've seen that kind of cutting rates, markets holding now, and thinking that we're going to see rates hold for a little bit. Other data elsewhere. So BOJ. Okay, so what have the BOJ done? They've held interest rates. What have they also done? Come out with dovish remarks. So we're seeing the Japanese yen weaken significantly. That's the BOJ for you. I don't know how to say anything else. That's the BOJ. That's the BOJ doing BOJ things. UK, they also held interest rates at 4.75%. What's quite interesting here is the expectations of cuts. So we actually had 2 members looking to cut sorry, hang on 1 second, let me open that up, because that was 8 previously, but I'm pretty sure they held previously. They held at 4.75%. Let me go down to this. Yeah, I have to remind myself of this every now and again. The first number is how many they voted to increase. That's it. Second is how many voted to decrease. And third is how many to hold. So actually we had 8 members looking to decrease rates. That was quite shocking to me, actually. I don't remember it being like that. I thought it was the other way around. So I thought it was 8 were to hold and 1 was to cut last time. So I don't know if that data is right there, because I'm pretty sure that was different, but maybe my mind's playing tricks on me. So yeah, only 2 members voted to cut this time, 7 for a hold. So yeah, we've started to see the Bank of England kind of hold rates. Interesting with the pound though. Interesting with the pound, because they've cited inflation as well as being their sort of problem. I'm saying that like I don't live in the UK. So let's just have a little look. United Kingdom. Yeah, so inflation popped up to 2.6%. So they want to try and beat down this move as well. They're going to hold interest rates a little bit higher. They've been a lot more gradual than the likes of the ECB, the Federal Reserve, places like that, or Europe and the US. They've been a lot more sort of gradual in how they cut interest rates, but still CPI coming in a little bit hotter. It's probably down to sort of more energy prices than anything. If we have a little look at food inflation, kind of rose a little bit. Energy inflation did rise as well. Technically, it was down to 8.8% in November, but up from 10.1%. So we'll have to have a look at where that kind of inflation has come from. So yeah, it looks like it's coming from the rent side of things as well. So let's have a look at services inflation. Services inflation only popped up slightly. So it looks like rent inflation is really the one that's kind of caused this little bit of a move up in the inflation prices there in the UK. And they're expecting to hold interest rates for a little bit. I think it's going to be, the UK is going to be interesting because the forecast for growth is very, very low in the UK. I feel like this is going to be one of those where the UK holds rates for a little bit longer. Now, the one thing that I would say in the UK at the moment, and I take this with a pinch of salt. The unemployment rate is at 4.3%, but claimant count change came in near zero, and the previous month was minus 10.9. Now, to me, that is data where you would say, okay, well, we've got some decent employment coming through, and we're going to see that sort of impacts in the unemployment rate, right? Because typically when you see this down, you'd expect the unemployment rate to be down as well, because there's less people kind of claiming those benefits there. But, I don't know whether I trust the data out of the UK, to be honest, from the Office of National Statistics, because they went through a period of not actually giving any statistics for about 6 months. So don't know how much I trust from them. But yeah, essentially GDP is expected to kind of remain fairly low, 0.1%. I think when you look at forecasts on here, it does say it's expected to grow, but 0.2%, 0.3%, it's very, very low when you can kind of consider other markets out there. The US are expecting GDP growth of 2.8%. Yes, they are massive compared to the UK. Have a lot more people working, for instance, but if you look at capita per person, it says 54.1 for 2023. So it'd be interesting to see how that comes out at the end of the year as well. But GDP growth is expected to be quite low in the UK, and then when you've got that with higher interest rates as well, I don't feel that bodes well for the UK going into 2025. I think at some point maybe the BOE are going to have to cut, and probably cut a little bit more aggressively than everyone else. And I think at that point then the pound is going to be a currency that we can probably get onto for a bit of a short move. Hi Emma. Hi Eddie. Hope you're both well. Yep, yesterday was very, very interesting. We were just kind of talking about the bond market for a little bit. But yeah, stocks were battered yesterday. S&P 500, for instance, was down. NASDAQ, the Dow, quite interestingly as well, the volatility index was significantly higher. We actually jumped a lot higher than when President Trump was, or the presidency was going on, which was interesting. If we look at the sort of gain that the VIX had, it was up 90.43%, which is just absolutely insane. Went from 14.8 up to 28.25. We've gapped much lower now, and it's starting to come back again, which would be a bit of a relief for markets. I think if you're going to see one strategy that I do like to use and I do like to look for is that when you see volatility rising, that's usually bearish for stocks. But then when you start to see that volatility start to fall away, that's usually bullish for stocks. So what I like to look for is, does the volatility start coming down? Does it start coming down gradually as well? And you can start to look to be a buyer of stock markets again. If I just have a quick look here, and if you just go and grab like the S&P 500 and just do a quick compare to that, and I'll just add this to a different scale, right? When you see volatility increase, okay, and you saw that increase here, right, you can see that the market started to move lower. When it started to decrease, we started to see a bullish move higher. Volatility again kind of increases sharply. We saw a move in the stock market, starts to decrease, market moves high again. So you can really kind of see how volatility impacts that. So I want to see volatility when it rallies, stock markets move lower. That is good news, because again, we can try and find value at different kind of levels. But also, I'll keep an eye on the VIX, because if that's going to then start to gradually fall, stock markets should continue their sort of upward path. So that's something to also take into consideration. Keep an eye on your volatility index, because when that starts to fall, stock markets can rise again. So that's something I'm looking for. Let's go take a look across some of the currency pairs then. So one currency pair that I was interested in this week was EuroCAD. I got stopped on a trailing stop here. So when we talked about this on Tuesday, market was bullish. I ended up taking half my position off, moved stop losses to underneath these lows. Actually, if you go to the hourly chart, underneath these lows, so I got stopped out on those. Unfortunately for me, the market has kind of pulled back here now. So I'll keep an eye on EuroCAD because I don't necessarily think the move is done here. But, at the moment, you can see that we've got this kind of upward trend still. It looks like we're entering the secondary phase here, right? So in that secondary phase, what do we typically see? We see a downward trend on the lower time frame. So let me just get rid of these session breaks. Very similar to what happened here, right? You got the market that was in a primary phase, okay, which is this one. So this is your primary. This is your secondary phase. We entered that primary phase again. Now we're in the secondary phase. So I need the secondary phase to break trend, essentially, very much like what we did here. And then I can look to be a buyer of EuroCAD again. So, yeah, unfortunately got stopped on this one with a trading stop, but I'm looking to see if that can continue. One market I did manage to catch, though, was the pound, right? And we did talk about this on Tuesday. I'll just bring in the currency strength meter. Pound here was bearish. I like the idea of being a seller of the pound. Weekly was bearish. We were below the 50 moving average. Momentum was down. Stochastic was down. Daily trend and phase was down. So I'm looking to sell that market, or I was looking to sell that market. Still looking to sell that market. But I managed to jump on a little bit of a move here. So price was kind of pulling back. We kind of talked about this zone where the market could come back into, right, before going to the downside. I actually shorted this on a 4-hour time frame, and what happened was the market kind of broke trend here on this trend line resistance. So it was actually quite fortunate that the FOMC went my way, because I actually just put a sell stop order below that 4-hour candle low. Stop loss was 10 pips above that high at 60 pips, and I targeted down towards this swing low. So it was only a 1.2R return on that move, which I would like it to have been better than that, but sell stop worked out for me here. If I'd gone in live, I would have had a bit of a better risk reward ratio, but it wouldn't have been much where I put my stop loss. But yeah, that was a nice move there. Market came down, filled my order in. Lovely. Prices have rallied back since. I mean, it's starting to make a good move again here, but I just don't know whether I want to get on any more trades now that we're kind of coming into the last week of the trading year. Maybe you can consider that as a break in trend now, and you might want to look at considerations for this sort of 4-hour trend to continue in line with the daily trend. But really speaking, market looks likely to come down into sort of the 125 handle, where we could see a bit of a move. This is the daily stochastic. Have a little look at the 50 moving average. Price is below the 50 moving average. So this was kind of a textbook move for me yesterday. Even look at that hourly consolidation break on the hourly. I just put my sell stop below those lows there. Market triggered on the FOMC news, and we've continued lower. So yeah, it's been an interesting couple of days in the market. Let's go take a look at the yen, because this is the market that's moving at the moment. If we look at dollar yen, price is flying to the upside, and this is why it's so important to have extra processes in place. So what I mean by that is, when I look at the currency strength meter, it's telling me that the yen is the strongest currency. Okay, or was the strongest currency, but it's in a reversal zone, okay, because it's at these +7s, and that means that it's really strong, or it's coming to an end. Now, when I look at the market across the board, then, so you can see I've got Aussie yen, for instance, and I've got reversal next to it, and that's what we did on Sunday. Now, what I look for, even though it says reversal there, what I would look for is the original trend to continue, but I still need these sort of extra steps to line up, and you can see that it didn't, because if I was going to remain bearish on Aussie yen, I'd need to see red, in order to be a seller of that market. But we didn't have that. We had a bullish weekly close the prior week. Momentum was to the upside. Stochastic was bullish. The only thing that was against it was the daily trend. So when I look at it, what does that mean? Well, if we go to Aussie yen and have a look at the daily chart, okay, market is technically bearish here. We were bullish, and then it changed trend. The market's making lower lows and lower highs. We're below the 50 moving average, okay. But one thing that really, two things that really put me off. The first was the stochastic being bullish, okay. I like to see that pointing downwards, because to me the stochastic oscillator is a momentum indicator. So I want to see the momentum with me, not against me. But also, market was just finding a bit of a low there. I mean, I say that would have been a good move, I guess. Looking back in hindsight, that move from there would have been nice. But just the BOJ have just kind of ruined it, I guess. But yeah, I'm kind of backtracking here on myself now, because I still feel like this is a good downtrend. Market is still below the 50 moving average. This is still below resistance. So, in order for me to really kind of get on the back of this, though, I need that stochastic to really start punching lower. That would have been my good sort of move for that, I guess. But it just shows you sometimes having processes in place can kind of help you stay out of potential markets that could reverse. Obviously, the BOJ could have gone the other way and it could have sank lower, and I would have been, it would have gone without me anyway if that was the case. Right, guy, what are your thoughts on gold? Yeah, let's go take a look at gold, because I'm absolutely ranting at the moment. I actually thought about shorting gold on this hourly close here. I actually thought about getting short, but I didn't want to get short ahead of the US Open. But quite interesting gold, isn't it? We talked about how we have a seasonal bullish period through December, and it's not really following that seasonal bullish period. It had this nice rally up, market consolidated, we broke out of that consolidation. My concern was if we closed back within, I was hoping that we would pull back into this consolidation and kind of rebound. And if we did, I would have been looking to be a buyer of gold, but that hasn't happened now. And this is, quite similar. Usually when stock markets fall, you'll see gold prices fall as well. So stocks are being sold off, gold's being sold off as well. But yeah, I don't necessarily think about this price action here as being very bullish right now. You've got stochastic pointing bearish here. Momentum is to the downside. So I'm looking for continuations. I did think about selling this earlier, I must admit, on this little break here. But yeah, it was trying to sell at that previous hourly low, and yeah, just didn't suit what I wanted to do there. So I didn't. But yeah, gold prices I think could maybe trickle a little bit lower. Again, I would kind of try and time that with what's going on with the stock markets. I think if you start to see stock markets increase again, the market kind of really push back into risk assets, then I wouldn't mind looking at potential rebounds on gold as well. But again, we haven't really got anything kind of from the commitment of traders or anything like that to suggest that gold is on this kind of big reversal yet. So until that happens, I'm still kind of looking at what's happening from I guess a technical side of things at the moment. So yeah, we'll see. I think gold could do with the pullback as well. Look at the performance of gold through 2024. We were talking about as it kept going and going and going, we were kind of like, where is the value? Where can you buy gold that is valuable? And I didn't see that value up at these levels, but markets can be irrational longer than most can stay solvent. So we could have seen that breakout, and we could have seen the seasonal pattern play out, and we could have seen price kind of top out at these highs, but we haven't. We've seen a bit of a reversal. So yeah, for me now, not really interested in doing much on it. Thought about selling it, but I'm not gonna. I'm just gonna wait. You know, if price can come back to this kind of 2,500 level, I think that would be a good level for support. So I will wait to see how price reacts at that point in there. Thoughts on silver? Yeah, silver. So really odd silver, isn't it? Because I would arguably say silver was my trade of 2024. I really liked the idea of buying silver at the start of the year, and you know that turned out to be a really good decision. You know, $22 was our base, and you know that was one of our best performing sort of commodity trades this year, or it was one of my best performing commodity trades this year. We had a commitment to trade a sell signal late October, and you can see since then the market has been selling silver. So hedge funds still been selling silver. You know, market is moving lower. We came up to resistance again at $32. Markets continue to drive lower. So I think silver's in a bit of a similar boat to gold at the minute. You know, if we look at the gold silver ratio at the moment, it looks like obviously people are favoring gold over silver. That will probably change if we can reach significant highs again, and we'll probably see a flip of that sentiment, because silver will be sort of cheaper than gold to be a purchaser of, so maybe back up at these 91.50s. But silver at the minute is continuing to drive lower. Let's see if there was anything that we could have looked at. I just know hedge funds have been short silver. So you can see actually on a 6-month basis, commercials are buying this up at kind of record levels over a 6-month period. So commercials are starting to become long again. Last time we were that significantly long, it was this candlestick in here where the market rallied. Let's look at the hedge funds. Yeah. No, I don't. Yeah, I don't. I feel like hedge funds are selling at the moment. Commercials are buying because silver's getting cheaper. Do I see that as a turnaround just yet? Probably not. Probably not. You know, I probably think that we need to wait for some bigger longs coming in. You know, this is why we got interested in being a buyer of silver previously in the past. We started seeing commercials and hedge funds selling, and you know, market rebounded and rallied higher, which was nice. But you know, this $30 level is not a bad level, just kind of looking at that. But you know, I wouldn't mind it coming back towards the 25s or the $26 at least, down into these lows. We'll see how the week closes on that one. It's going to look very bearish right now. But if we can get some kind of rebound in at the 28s and a hold here, then it might be something to consider going forward. Let's have a look at the monthly chart. Monthly's looking a bit toppish. You know, you might even get like a monthly head and shoulders pattern, something like that. But these are nice monthly lows down towards the $28 area. So it looks like we're going to be heading for that, really. That gas continuing to move higher. This was a bullish commitment to trader report signal. So, yeah, market has stayed bullish here. Look at, as soon as we kind of traded back above the 50 moving average, you know, we've just continued to drive higher on natural gas. Commercials are really buying this up right now, which is why we're probably going to see a potential breakout of this high. That's what I'm kind of waiting for. If we get a significant breakout of this high on natural gas, this market could get moving, and it could get moving in a big way. We could be back up towards the 5 area or even up towards 7. So I would be very, very interested in being a buyer of nat gas if we can breach these highs here. So we'll keep an eye on nat gas. Maybe that's one trade to think about for next year. You know, think about nat gas plays going into next year. Something to talk about as well, sorry, just to kind of revert back. Japanese 10-year coming up back up to the 1.1%. Now, this was where we had intervention, right, from the BOJ. We're coming back up to similar levels now on the 10-year. So again, just keep that in mind, right? You've got these yields that are rising. The Japanese yen is weakening. Usually this is the ceiling for that. Okay, so when you start to see prices up at this level, yen yields can fall, yen can strengthen. So just keep an eye on that, right? Just keep an eye on that, because 1% to 1.1% is where the BOJ start to get a bit trigger finger when it comes to intervention. So yeah, just keep a quick eye on that. You know, this was the other intervention we had in the past. You know, the previous ceiling was 0.5%, you know, so keep an eye on this 1.1% when it comes to the Japanese 10-year yields. What's your thought on Bitcoin? I have many opinions on Bitcoin. Well, what do you want to know? You want to know if it's technical, buy it, sell it? I can't tell you that, obviously. From a personal opinion, I would be... Bitcoin's a difficult one for me, because I get its value from a transactional point of view. I just don't understand. This is just me being, you know, you in the chat might have a lot more thought process on this than I do, but me personally, I just don't see where this decentralized part of it is gonna, you know, is gonna be good. On a bigger picture, you know, I think decentralization sounds good, you know, but they talk about, or I guess people that are really into the Bitcoin space, they talk about this sort of image of, you know, there not being a bank, or there not being a central bank, and it's just this currency that will get, you know, transactions on the blockchain that are transacted globally, and no one will hold, you know, no one will have sort of these big holds on it. But there's already people that have big holds on Bitcoin. If we look at MicroStrategy at the moment, I don't know if you've heard of MicroStrategy, but it's a company that is becoming a Bitcoin reserve. They're using all their profits to basically buy up Bitcoin, and they're doing it at aggressive rates. So if I just hit the compare button here and hit up MicroStrategy, okay, and just put that on a new price scale there, the price of that company compared to Bitcoin is fairly similar. It actually dropped over 30% yesterday because Bitcoin prices fell a little bit. A lot of people calling it a Ponzi scheme, which is really interesting to kind of dive into. I don't know too much about it. I've done a little bit of research on it, but basically the way I see it is, what they're offering at the moment is, because a lot of hedge funds, a lot of people or pension funds X, Y, and Z can't and are not allowed to trade Bitcoin, are not allowed to actually have their own Bitcoin reserve. MicroStrategy has become like the middleman for that, and what they've done is they've offered their own version of a bond, like a government bond essentially, to get exposure to Bitcoin's volatility. So what MicroStrategy have done is created this sort of bond, right, to say that, okay, if you buy our shares essentially at this price, we will lock in that price in Bitcoin as well, the equivalent of it in Bitcoin, and if the price rises, you will get your return on your yield in the next year or whatever. I think it has to reach 55% above that price, right, for you to actually get the gain from the yield. If it doesn't reach 55%, you just get your money back. So it's almost like a win-win for kind of pension funds and things like that. What he's doing is basically, I think his name's Michael Saylor. What he's doing is creating a situation where, in a round of fundraising, you can invest in the company, but have your money back if it doesn't go well. And I think investors see that as okay, well, this is kind of a win-win for risk, right? So we get our money back if it doesn't do 55%, but also we don't lose anything on the downside risk. Honestly, I don't know how they don't lose anything on the downside risk, because if Bitcoin drops 50 to 75%, which it can do, we have seen it do that in value, I don't know whether MicroStrategy will have the funds to be able to pay those investors back. So yeah, I don't know what's going on, to be honest with that. Does sound a bit like a Ponzi scheme. But anyway, I might do some research into MicroStrategy and give you a heads up of what's going on there. But Bitcoin prices have been rallying. Look, do I think the market is probably still going to rally? From a long-term point of view, I don't know where it's going to be in 10 years. I don't know where it's going to be in 5 years. Maybe 2 to 3 years, it's going to be a lot higher in price because of the fact that it will become scarce. There's only going to be 21 million Bitcoin ever mined. So when that comes to it, I think that then maybe, it's almost like, well, the scarcity factor, it becomes rare then, and then people try and pile into it because it is rare. So I think that factor comes into it. If we do see deregulation by Donald Trump, which he's very much for at the moment, then yeah, I think maybe that will also bring about some rallies as well. When I switch my hat to an investor hat, do you want to be a buyer at the highs? I wouldn't. From my personal point of view, the long really was October in here. Seasonal pattern for Bitcoin in October for a rally, and that was almost like the perfect time to be involved with that market. But I just see it as another sort of asset, as a tradable asset. Do I see this as something long term? I don't right now. I would love to speak to somebody that could change my mind. I'd love to kind of speak to somebody that knows Bitcoin at a deeper level than I do, because I would say the level of my sort of knowledge on Bitcoin in general used to be very good. I used to keep up with it quite a lot, but then I didn't see the value in it. I didn't see how this would be accepted, and I've missed out on that move. I will say that I've missed out on that move. I have been buying it up every now and again. Don't get me wrong, I have been like aggregating into it. When we talked about it coming down to 50s, I quite liked it. So I have been like getting invested into it. But do I see this whole long-term plan of it? I don't know. Do I personally put a lot of my portfolio into it? I don't. It's a very small amount. But I don't know. It's an interesting topic, isn't it? It's an interesting debate to be had. Maybe I'll try and find somebody to debate on the channel, and we can have them on and we can talk to them and see what they think as well. See if they can kind of change our minds on this. But I was I would say I was an early adopter of Bitcoin. I was buying it down at the 500s. But I didn't understand it. And I feel like that's still where Bitcoin's at the moment. People are buying it, but they still don't understand it. But they're buying it because it's hot. Hi, Chris. Hope you're doing well. Value, I don't know, but I don't see what Bitcoin value can. Yeah, see, again, I kind of agree. Like, I get what it's there to do. It's instant transactions, right? Without the middleman. But the miner's the middleman to me. The miner is the middleman. I can see how it is valuable to emerging market countries, because a lot of them don't necessarily have the financial systems in place. So crypto has been a valuable tool for them in the emerging market space. There's an interesting kind of topic to talk about in terms of the value of Bitcoin and how governments, especially emerging market governments, are using it to pay off big debts. There's something interesting about that as well, but I'll need to do more digging on that. I don't know yet, Vincent. That's the honest answer, because we don't get the report until Friday, so we won't know until tomorrow if anything has changed. Honestly, I feel like they would just be getting more aggressive because price has fallen, right? So we've got a signal here. Price is falling. The only thing I would say is we're probably going to see commercials buying more of it, and we're also probably going to see hedge funds selling more of it. So to me, I like the idea of being a buyer of euro, but I'm only going to be buying it against currencies that are weaker than it. That's why I look at we took a look at sort of euro CAD this week. I did like the idea of being a buyer of euro pound as well. And then we do have this little double bottom play going on at the moment down at this weekly support zone. So this is a very strong weekly support. Euro pound's coming into this area. We're starting to see a little bit of a rebound here now. If we go down to the 4-hour time frame, you'll see that we're starting to form a little bit of a base. We've got this almost like a bit of a trend line break here. So this is a market I quite like on a bit of a reversal. Are the conditions there for the reversal yet? Well, it depends what you want to do. Do you want to try and get in early, which is down at these lows, or do you want to wait for the trend change? For me, if we wait for a break above the 50 moving average, price to pull back, then we can look for the continuation up to the 8,400 area. That would be something that I would be looking at the moment. Stochastic is showing a little bit of bullishness going on here as well. Momentum starting to shift, but I do like this euro pound play, to be honest. For me, the euro has the COT signal. I think that the UK GDP is a big problem, and I actually think that holding interest rates higher is a bigger problem as well. And I think that we're going to see some pound weakness in 2025. So, I like the idea of looking at these kind of moves on euro pound at the moment. So I wouldn't be buying it against the dollar, because the dollar's a strong currency at the minute. The only way I'd be doing that, again, do we see a significant shift in trend, and does that give us the opportunity to be a buyer? But I imagine euro futures moving lower, which is technically a euro dollar chart as well. That to me would suggest that the hedge funds would be selling more of it, commercials would be buying more of it. Yeah, Eddie, no use case maybe. Yeah, I kind of agree with that as well. What other markets did we look at? CAD yen, but that's, again, that didn't kind of come to fruition, did it? If we look at the hourly chart, we were talking about the potential for the market to cross over here and continue lower. Just didn't happen, did it? The market kind of just made this sort of bullish pattern. It was just kind of a bit of a weird pattern. The market was making higher highs, then made a lower low, and then obviously Bank of Japan came in at that point. But again, stochastic on the daily was pointing more bullish, so I wasn't going to sell that market just yet. Anyway, what other markets did we discuss? I think it was euro. Aussie's found a little bit of support, hasn't it? Aussie Kiwi was on the list. That didn't really do much. Again, momentum didn't really shift, unfortunately. So yeah, the only real good one this week has kind of been euro CAD long, pound dollar short. Yeah, Euro Oz was another one, wasn't it? But Euro Oz was at the top of that range, so I didn't like that. Broke out the range though. Has broken out the range, so maybe now we can put this on our watch list. As in, if price starts to just slowly come back here, we can have a little look for changes of trend on lower time frames. Have a little look at some upside on Euro Aussie. Not too against that, to be honest. Again, 4 hours still bullish at the moment, but if the daily chart closes bearish, then the likelihood is that we could see a bit of a pullback. We could see a bit of a downtrend form on the 4 hour. If that breaks, market could rally. This was when we talked about the potential long. That would have been really nice in the end, because it did break through those resistance highs. Euro Kiwi, also making its move higher. I'm a little bit cautious on the Kiwi as well, because we've got, you know, a commitment to trader report signal on the Kiwi as well. So, you know, if we've got two long signals, you know, you've got euro with a long signal, New Zealand dollar with a long signal. Do I really want to be buying and trading euro Kiwi? No. I want to be looking for another market that could potentially be weaker than it. You know, you've got pound, for instance. It could be one of those. Aussie could be one of those as well. So yeah, I prefer to go and trade that against something else. So Euro Oz looks pretty good. Euro Oz does look pretty good. I would be happily adding that one to the watch list, which I think is already there, right? Yeah, Euro Oz is bullish. I had Euro Oz as a buy this week. Just didn't execute on it. Just didn't execute on it. Where's Monday? There's Monday. Yeah, just didn't execute on it this week, but price has rallied. You know, that's a nice move through there. I'll just wait for a pullback now. Market's made a new high. That's fine. Let it do that. You know, let's see if it can pull back a little bit. Let's see if we can get potentially long on that going forward. Well then, guys, we've been running for 50 minutes. I think I'm going to call it there. There's, you know, it's going to be no sort of analysis next week. But I just wanted to take a moment to say thank you to everybody that has joined the streams this year. The support on the videos has been great. It's been another good year in terms of content and growth on the channel, and I really appreciate that. As well, for clients that are with Blueberry, thank you as well. But ultimately, I want you to have a great break. I'll be back in January. I hope you have a great end of your year as well. Enjoy it. Take a break from the charts. Come back refreshed in the new year. And hopefully we can have some more successes going forward. So I wish you all the success in the new year. And I hope to see you all on the other side. So thank you, everybody. And I'll speak to you very, very soon. Thank you.